guys, Darren here. Thanks for joining the Stock Option Market Weekly Update for the week of April 22nd, 2024. Today we're going to talk about where we are in the market year to date in the S&P 500. We're going to touch on some of the economic data that we have, the different sectors, how they're performing, and we will jump into the live trades on the option trading platform. Guys, if you appreciate the time and effort that goes into making these videos, if you can do me a favor and hit that like and subscribe button, it really helps to get the video out to more people, and I appreciate it, so thank you very much. I think it's super important that we understand the tools and the strategies that the rich are using to get richer. Then we can use those same tools and strategies to profit for ourselves safely in any market. Be sure and download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks. There's also a paid course if you want to dig into option trading a little bit deeper. Use the link below and open an account with Moomoo. You can get 1.5% cash back or 7 free fractional shares of stock for opening an account with just a $100 deposit. Disclaimer, I'm not a financial planner and I'm not recommending trades. Please do your own research, and if you're new or learning options, I recommend you start small. All right, guys, let's see where we are in the market today with the S&P 500. If we look at the 5-day, you can see that we are trending down a little from last week. Let's put it on the 5-day, expand this a little, but you can see where we just kind of trended down all week. We started the week at 51.23 and ended up at 49.67. We are now down about up about 7.5% year to date. So you can see we are still up, but we had a big trend down during the week. And if we go on and look at the economic calendar for the week, let's see what we've got. We've got coming out Thursday prior to the open at 8:30 in the morning, we've got GDP numbers. We've got 2.2% that is expected. It was 3.4% previously. And we've got on Friday, we've got PCE and core PCE coming out. PCE is at 0.3% expected, and core PCE is expected to be at 2.7%. So that's a real measure of the inflation, and the Fed's looking to get that down in the lower, closer to 2%. If we look at the Fed Watch tool, we can see that it's not until September now that the first rate is expected to come. 5 to 5.25. We're up. If you look at July, see, it's still expected to be at 5.25 to 5.5 where it is today. So that first cut is expected in September. Some people think it may not come until later in the year as well. The Fed keeps preaching higher for longer, and that is why the expected rate cuts at first they had 3 or 4 expected cuts, but with inflation not coming down and being in check, the Fed is going to keep rates higher for longer, so we're looking at September. If we go into the FactSet earnings report, and we can look at the Q1, actually let me expand this a little. Q1 numbers are earnings growth rate is expected at 0.5%. So that is down a little bit from prior. If we move on to page 6, well, you can also see the 12-month PE here is 19.9, so that's come down a little bit, but we're still above that 10-year average of 17.8. And then if we go on to page 16 on this report, we can see the numbers for Q2 expected 9.6% earnings growth and 4.4% revenue growth. So numbers still for calendar year 2024, 10.7% earnings growth and revenue growth of 5%. So still good. And then increasing to 13.8 for 2025 and 5.9% revenue growth. So as those interest rates begin to get cut later in the year, September or after, then that will help spur the market, or it should. And if we go down and we look at the PE, the 12-month PE, you can still see that energy is still down, even though energy's up. Crude oil was up this week. Actually, we'll look at that on the sectors, but the PE is still fairly valued for energy. There's a war going on, geopolitical issues, so I do expect energy to stay high for the time being. And utilities are down 15.8 PE versus 17.6 10-year average, and then real estate is down as well. And you can see those reflected in the 5-day on the Spider sector tracker. Just go to sectorspiders.com and you can see for the 5-day, everything was pretty much down last week. Technology was down big with the inflation, and consumer discretionary was down big last week. And then if we look at year to date, though, we're still up, although tech came back and it's almost flat. But real estate is way down 10%. Consumer discretionary, so inflation, I guess people should stop spending if there's inflation, and maybe save some money or invest, do what we're doing. Communication services is up 9%. And the fear and greed index is way down to 31. It was just up at the greed and extreme greed range just 2-3 weeks ago. So things have really come down. So if we jump into the trades on the option trading platform, I put on a really dumb trade last week. I bought a call 26 days out, so I've still got time in crude oil. There was talk, it looked like the war was escalating, so I kind of bought that as a hedge, but you can see I've already lost over 2 grand on it, so not smart. It seems like every time I try to buy or trade crude, I'm getting killed, so maybe I should stay away from that. But I'm going to look to unload that. If we get a tick up, you can see um, it was down. I probably put it up right here at the bought it right at the top, but it was down. But I do expect it to stay high. So I think I'll be able to get out of that within the next 26 days. And we definitely don't want the war to escalate. But if it does, then this could be really profitable as well. Adobe, 27 days left till expiration. I usually look to roll trades at around the 21-day mark. So I look to sell options for the most part, unless it's leaps that I'm buying, or poor man's covered calls where I'm selling a call against that leaps option. They're longer term. But the put spreads and iron condors, I'm typically doing 45 days out, and then at 21 days I'll roll. But with tech getting killed, Adobe, I got killed as well. So all the high tech that I'm in, I'm getting hurt on. But you can see the chart is down on Adobe. I've got 2 put spreads on, or no, I've got 1 put spread only, and then a call that I had rolled down. There's a lot of extrinsic left in that call. I'm looking to roll it on Monday when the market opens down to my 485 range, and then that will allow me to collect more premium. I've got it above the market, but another $362 I should be able to collect in premium in Adobe. And if we look at where is that? It's way down, 465. Wow. Let's Yeah, so that brings my profit range. It really tightens it up here between 485 and 500, and you can see where it went down. But if I roll it, and then anywhere between here and 5, yeah, a real small target range. But at this point with Adobe, my target is much higher. And I think they're going to do well. It's just this macro environment right now that it's getting hurt. But I'm planning on rolling that down for next week, and then at around 21 days, the end of next week or the following week, I'll probably put on another put spread if the market's down or if it drops more, and just stay long. I don't think Adobe can go down much further than this, but I guess we'll find out. But I'm going to stay along Adobe with put spreads and just follow my plan. And because of that fear and greed index, that's when everybody panics and gets out. But that's really the time to be long in the market. And tech is beaten down right now, so I want to stay long. And this is, again, a small portion of my portfolio. So any retirement 401k, uh, I'm going to have in a separate account, basically in the S&P 500, and just let that sit long term. But this is my trading account with options and look to do a little bit better. So I do recommend you stay small if you're doing this and don't trade more than you can afford to lose. AMD is down 146. You can see the how it dropped huge. So again, same situation as Adobe, and AI is out of favor right now. So I'm going to stay long because my target in Adobe is much, or AMD is much higher as well. But it's down. Uh, I was traveling last week, so I did not get a chance to trade. So I apologize. It's been a couple of weeks since I did this, but 2 weeks ago it was up at 170, and now it's just fallen, and AI is out of favor and it's down. And there's earnings on May 7th, but I'm going to stay long AMD right now. Amazon I'm looking to put on just because it's a behemoth and it dropped as well. So they've got earnings coming out on May 7th. And if we go over here, we can see that in the overview. Oh, it looks like April 30th. I've got that wrong. So April 30th. So coming up, they've got earnings, but Amazon is a monster and going to do well, and they're down. So, but trending up. So I'm going to look to put on a put spread, small, $5 wide. I put it above the market, but this is just to remind me, and it's good till canceled. So I'll leave that on there, but I want to collect a third the width of the $5 strike. So $500 width, $175 is what you can collect on it right now, which is about a third. And it gives you a little bit of room for it to move down as well. Okay. And then if after earnings it drops, then I'll put on another put spread at that point. That's kind of the plan. DraftKings has done really well, continues to do well, but it did drop just like everything else. Look at that drop, but it's trading in that channel. And let's see, on DraftKings, we've done pretty well. Just in the last, see what we've done in the last 60 days. Last 30 days, 1,484, and then in the last 60 days, 2 months, we've made a couple grand already in DraftKings. So I like DraftKings. I think they're, DraftKings, FanDuel, the online gaming is growing like crazy. I've got a leaps option here, deep in the money call option that I bought, and then I sell calls against it. And this call I just rolled down, but it's at 45. And let's see, I rolled that down, yeah, right here, from 49 to 45 and collected another $77. And this was just last week, the 19th. So what was that, Friday? But DraftKings is killing it, and I'm going to stay long and do poor man's covered calls because it's a low price stock. Google, they've got earnings coming up on 425, so this coming week. And same strategy here. They're down just like everything a little bit, but they're trending up, and Google's a monster. My target for Google is much higher. Let me see what I've got for my target. I'm looking at 180 to 200. When the economy does turn, and the first interest rate cut, so it could still be a few months, but 98 IVR, so that is good for selling options, and so I've got a put spread on. I'm going to stay long. I actually rolled that up and collected more premium, so I think just did that last week. Yeah, in the last 30 days, we've made $506, and I rolled that up and collected another $153 on 4/15. So Monday of last week, I rolled the put spread up, and we've got, I'll look to roll this again out to June to the regular options chain, either at the end of this week or the following week. IWM, the Russell, it's been beaten up, so I'm looking to get long, but it's been trending up. It's going to do, wait, that's not the Russell. There we go. Yeah, it's down. It was trading in a little bit in a channel, but I guess I got to move that. But I am looking to get long. 82 IVR, good for selling put spreads. Trying to collect and just get in small in June and get a third of the width of the strike. Just do a $5. And then if it comes down, get long again. But again, I'm kind of waiting on the sidelines since tech is down. Interest rate cuts aren't coming for a while, but this is something that will do well as we move forward. Um, and that's IWM. And actually, we just were in IWM in the last month. Yeah, we made $370 just in the last 30 days on uh, IWM. But and then I got out because it moved up, and now we probably put it on down here, and well, actually, no, we put it on somewhere here, and then it moved up, and now it's way down. I'm glad I got out before it moved, but IWM looking to get back in. L3, I was surprised it got hurt. It was trading around that 210 range, and we've been doing really well trading, being long put spreads. And, in the last 180 days, we've made 896, but recently it's moved down. And if you look at the curve mode, as long as it stays above what is this, 206, and we're right there, we're going to be profitable. But I've got 3 credit spreads on. They've got earnings next week. You can see right here on 425. So I expect that that they're going to do pretty decent. There's a lot of geopolitical activity and wars, and we're ramping up, or I believe our military. We'll find out. But my target on L3 is like 240 and 425 earnings. So I'm gonna stay in this next week, and then we'll see how it does. Either it's going to be profitable at some point in the next week. I'll close these out and then move into June, but I'm going to stay long L3. Nvidia, I think there's a sale on Nvidia right now. I know it was skyrocketing up, but now AI stocks, Nvidia and AMD just got killed down here. But the PEG ratio, price to earnings to growth, is good in Nvidia, even though the PE is very high. But I am going to look to close these out and roll to June and stay the course. But I'm going to be long Nvidia. But I'll wait for a little move up, hopefully in the next week or two. And if that does not happen, we've got earnings on 522, then I'll close out and roll to June. Let's see, what's the next one? Path. That's a new one that I put on, and let's see. So it is UiPath. And the reason that I put on tech, again, it got killed since I put it on. Lost 200 bucks. But again, this is a high flyer, $18 stock. So I am doing deep in the money call. So poor man's cover call and a 20 call. I'm going to sell against it. I'm just going to stay long. These guys, I think it's a no-brainer. They do software for robotic process automation. So, over the next year, and when the economy comes back and the first interest rate, these guys are going to continue to take off. They've got earnings on 522. I suspect that they're going to continue to do pretty well. So I just wanted to get that one on small. Again, rather than spend 1,800 on one option contract that controls or on the stock to buy 100 shares, you can control it with half that amount of money using a leaps option, and then you can sell a call against it. And over time, over the next year, you continue to make money on the call, and you can basically own the option for free and control 100 shares of stock for free. I've made videos on that. Check out the poor man's covered call and leaps options videos, and it shows you how to do that. Palantir, same thing. Leaps option, 426 days, so over a year. I sold the call against it, and because it moved down, I think I closed that out last week, the call. But any move up, I will, and they've got earnings on 5.6, then I will sell another call against it to make it a poor man's cover call. But just in the last 30 days, $95. Yeah, 570 over the last year. Not a ton, but I think Palantir is going to continue to kill it going forward. So that's why I've got it on. PayPal, I put this on, and again, tech got beat 430 options. I'm going to stay long. I'm going to roll to June. It's at 62. You can see it's been down a little bit. I think PayPal is great. The Qs. So actually the Qs, I've got a call spread on. I just rolled down. I don't know what this 975, but we've done okay in the Qs, and we're profitable uh, in the Qs as well. Let's see. Um, just in the last 30 days with the move down in the market, we've done $218 in the last 30 days in the Qs. So next one is SoFi. I've got a bunch of leaps options over a year, almost 2 years out here. But SoFi has gotten killed. They're down at $7, but they had their first profitable quarter. They're down. I don't think they can go down. They're doing well. They're going to come out on 4/29, and that'll be their second profitable quarter. And at some point, I expect it to take off. That's why I'm not even selling calls against it, because it's such a low price stock. But I've got 9, 10, 11, 1,200, because each of these contracts controls 100 shares of stock. So that's 1,200 shares of stock that these 12 options control. And I'm definitely long SoFi. If you're watching the NBA and the playoffs right now, go Lakers. They're going to have a tough time against Denver, though. But you see SoFi on all the NBA floors right now. So they've got a partnership with the NBA, and actually the Lakers or not. What is it? SoFi Stadium's the Rams, yeah. But they're going to continue to do well. Square, another tech, kind of like PayPal, 77.5. It's down to 70, so they've been hurt. Tech down. That's okay. I'm staying long. I think they're going to do well. I'll roll in June. Okay. SPX. I'm going to do a special video on SPX, and this week. Actually, I'm going to start making it right after this. But I've been day trading SPX and buying options, 0DTE SPX. I actually love it. I think I can generate monthly income or weekly income. So just this last week, I made $2,400 just the last week. The week before I was traveling, I didn't trade, but the week before that, I made $1,400. And I'm going to go through in a video exactly how to do it. So keep your eyes out for that one. TLT, so that's kind of my very short-term daily income strategy. And then I've got the 30 to 45 day option strategy. And then most of my money is just sitting in the S&P 500 in retirement stuff and savings, and that's what I don't touch and just let grow. This is what I play with, this account. And then I want to try to generate weekly income with 0DTE SPX, and that's what the video coming up is all about. So check that out. But if I can make $2,500 a week doing that, that's basically 4 weeks in a month. That's basically 10 grand a month. That's 110 grand a year, just doing it kind of on the side during the day while the market's open. And you'll see I don't generally trade the opening of the market, and I try to be out before the last hour of the market. So I'm just kind of watching, keep my eye on it all day, but it's something that's fun for me. So TLT and TMF are both bond funds. I'm a little early on these, so got hurt, but typically 90 days before the first interest rate hikes, they will start to move up and do well. And we just talked about September being the first hike, but yeah, these were up, and then they just moved back down recently. But I'm going to hang on. I'm out 272 days, so I think both of these will come back 3 months before September is what? June, July, August, June. They should start to really do well, I believe. Verizon, I've got 100 shares because of the big dividend that Verizon pays, and it's been solid, slow and steady, right around that $40 range. And then I sell calls against it. We're at 41 right now, but have done really well in Verizon over the last year, and it's right around where the target range is. I just like to collect that dividend. Wells Fargo's done well, and that 180 days we've done about 375 bucks. But basically a leaps option, we're up at a fair price around where it should be right now, and I've got a call against it. So I just like to keep my eyes on the banks, and actually it's way up right now. I should probably close that out and get out of it, but I like to keep my eyes on Wells Fargo because I like that bank, and just to have a financial on. XOM, ExxonMobil, it's been up. It just moved down though a little bit last week. I think on Friday. Yeah, that's when I got hurt on that crude. But 115 put spread. I've got a $15 wide, so it's a little bit wide. But you can see it's been up, and we've done really well in ExxonMobil. Uh, Actually, not really well, but okay. 358 over 180, 559. But that is where we are at. And then let's take a look here. The earnings next week that we've got coming out. If you go here on Tasty Trade, you can look at earnings, all earnings. You can sort by date, and then you can kind of scroll down. We've got Nucor, we've got Verizon, we've got Lockheed Martin, Pepsi, UPS, Spotify, Tesla, Verizon, Boeing, ServiceNow. Actually, ServiceNow, we did really well. Let's put in now. I'm going to look to trade this one after earnings, but we just profited on an iron condor. 30 days. Let's see. Yeah, we made $285. I just let it expire right in the middle because it trades pretty wide. It's not super liquid, but made $285 on this iron condor in 30 days, and I just don't want to do it. It was super wide, but going into earnings, I don't want to be in ServiceNow, although I think they're going to continue to crush it. But April 24th, so after earnings, then I will throw on another iron condor in ServiceNow. We've got Ford, Meta, Chipotle, American Airlines, Caterpillar, Microsoft, Google, and L3 Communications as well. So that's it for the trades. All right, guys, I put a link down below for the free options workshop. Be sure and grab that. Join Moomoo. Get your free stocks. Put a comment down below. Ask a question. I answer every one. Thanks for watching. Remember to hit like and subscribe, and I'll see you in the next one.